Right. Now, we come to adjustments. They say, depreciation on vehicle is calculated at 30% per annum on the diminished balance method. On the diminished balance method, take into account that a new vehicle was, with a cost price of 133,000, was bought on 1 November 2012. Now, like in the first activity, you need to calculate this depreciation in 2 stages, right? You need to calculate it on 2 stages. Firstly, you calculate on old vehicles. Then you calculate on new vehicles. On old and on new. Now, with the new is very simple because we do not have accumulated depreciation. Therefore, you simply take the cost price. We bought a new vehicle for how much? 133,000 multiply by 30 over 100 multiply by what? They said we bought it when? On 1 November 2012. Therefore, you need to know your financial year. Your financial year starts on 1 March 2012 and ends on 28 February 2013. They said, when did we buy this new vehicle? They said we bought it on 1 November. We bought it here. 1 November 2012. Now, for how many months did we use this vehicle? We used it for November, December, January, and February, which is we used it for 4 months. Therefore, you multiply by 4 over 12. That will be 4 months, 4 over 12. Then, you'll have 133,000 multiply by 30%, multiply by 4 divided by 12. Then it gives us 13,300. 13,300. And then we come to old vehicles. Old vehicles, they say it is calculated on the diminished balance. Remember, diminished balance we said is cost price minus accumulated depreciation. But we have already done that calculation for you. We have already done that calculation for you. You see, this is your cost price, right? Minus your accumulated depreciation. Therefore, you already have that amount of a diminished balance of 201,400, which you must multiply by 30 over 100. And then we have used this for 12 months. We have used this for 12 months. And therefore, you simply say 201,400 multiply by 30%, multiply by 12, divide by 12. We have 60,420. Now, where are our vehicles? Here is our depreciation. We have on old, we have 60,420, and on new, we have 13,300. And then when you add the two of them, 6420 plus 13,300 is equals to 73,720, which of course must be subtracted. Now, you can show these calculations here instead of there. but I just wanted you to see where I have them. I think we are done with vehicles, because nothing is being said here about any new vehicles that have been sold. Therefore, under disposal, you will have a zero there, because we only purchased vehicles. We did not sell any vehicles, and the depreciation has been given to us. Okay? Right. Then we come to equipment. The trial balance reflects a figure of 3,100 in respect of equipment sold. This relates to a computer which was sold for 3,100 cash. No other entries in respect of this sale have been made. The cost price of the computer was 6,000 and the book value at the date of sale was 2,700. Now remember, when I started, I said if you don't want to say carrying value, you can say book value. Therefore, which means now we don't need to calculate the disposal at carrying value, because that amount has been given to us. They've told us that the computer was sold, the book value of the computer that was sold was 2,700. Then you simply write the 2,700 there. Okay? Fine. We did not buy any new equipment. Now, what is the cost price? What is the cost price of our equipment at the end of the year? What is the cost price of our equipment at the end of the year? Remember, we said at the beginning of the year we had equipment to the value of 235,600. Now, in order to get this amount that comes here, you are going to say 235,600, which is equipment at the beginning of the year, minus the cost price of the equipment that was sold. What is the cost price of the equipment that was sold? We sold equipment, the cost price of the equipment that was sold, we have been told that it is 6,000. The cost price of the computer that was sold is 6,000. Therefore, we are going to subtract 6,000 there. And then we have 235,600 minus 6,000. Voila. We have 229,000. 600,000. 229,600,000. Right. Now we have almost all the elements that we need. Remember what I said to you about calculating the carrying value at the end, the accumulated depreciation at the end of the year. I said it is accumulated depreciation at the beginning of the year plus the depreciation for the year minus the accumulated depreciation on the asset that was sold. In this case, no vehicle was sold during the year. Therefore, accumulated depreciation at the end of the year here would be accumulated depreciation at the beginning of the year, 178,600. Now, let me do it properly. Accumulated, we want accumulated depreciation at end of the year. Would be accumulated at beginning, Our accumulated depreciation at the beginning is how much? 178,600. We are going to add depreciation for the year that we have calculated. Depreciation for the year that we have calculated is 73,720. 73,720 minus accumulated depreciation on sold assets. We did not sell any asset, therefore, we did not sell any vehicle, therefore, you will have 178,600 plus 73,720. It will give you 252,320. And there you are, you have your 252. 252. You simply transcribe it here, 252,320, which must be subtracted. Now, to get this carrying value, you say 513,000 minus